Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 17th of January 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. First of all, I'd just like to point out that we recorded the video today in mid-morning London time, so we've had a good couple of hours of the London session already. Just want to flag as well here, cable, British pound against the US dollar, 128.7780 trading a short while before we recorded the video, pretty much unmoved on the day, and given the news that's unfolded here in London over the last 48 hours, I think it's quite impressive that sterling has remained pretty much on the front foot. It's up on both the week and the month, and a pretty impressive performance from the British pound there. Not doing so well, the New Zealand dollar against its US counterpart, giving up 0.42% overnight against the US dollar, the Kiwi, and that's really renewed fears of a trade war and the effect that that could have on the New Zealand economy. The US dollar lost a bit of ground against the Japanese yen overnight, down by around 0.27% against the yen to trade at 108.79. But the dollar has made gains against the Brazilian real, up by a healthy 0.52%, chipping away at the monthly trend for gains in the real. Dollar index for its part trading around 96.06 as I talk, unchanged on the day, and the dollar holding up pretty well against expectations perhaps of a weaker dollar with that sort of change in sentiment around Fed interest rate policy. Okay, what's on the calendar today then? Events that may move the markets. Well, we've already had consumer inflation data or expectation data for January out of Australia. Consumers expecting inflation to be a bit lower than they did in the previous month. There's been some home lending data in Australia as well, and a speech by the Bank of Japan's Governor Kuroda. To come, and that's just had that release. Consumer price index data out of the Eurozone shows Eurozone inflation broadly in line with forecasts and expectations. And then this afternoon at 13:30, we shall have over the Atlantic and out of the USA initial jobless claims and continuing jobless claims for the weeks of January 11th and January 4th respectively. That'll be accompanied by probably the much more important data, the Philadelphia Fed Manufacturing Survey for January, a data-rich survey that people tend to look into and pore over for several days at a time. A very interesting report there, even though it may not be market moving immediately, tends to be a slow burner. At 15:45, the Fed's vice chair, if I can say that, Quarles will give us a speech, and then there's a pause all the way around until 21:30 when we'll have business PMI data for December out of New Zealand, and then another gap till 23:30 when we shall have national CPI data out of Japan. All of these figures year over year for the month of December. Okay then, breaking news and comment that's caught my eye. And first of all, Australian home lending dropped sharply in November. Consensus forecast a miss there, and that's another thorn in the side really for the RBA. Any hopes of a near-term rate rise probably evaporating with some of that data. Meanwhile, a German industrial federation has said a disorderly Brexit would leave German businesses staring into the abyss. We haven't really heard much from the German business community about Brexit, but it seems that they're starting to make their voices heard from now. Speaking of Brexit, Theresa May has survived a no-confidence vote in the House of Commons yesterday and will seek cross-party consensus on the next steps in the Brexit process. I'm tempted to say good luck with that, because consensus is the one thing that we haven't had ever since the referendum back in 2016. And French investment bank Société Générale warns of a drop of 20% in revenues for the fourth quarter of 2018 and 10% for the full year 2018. So investment banks feeling the pinch in Europe compared to their US colleagues, it seems. Okay then, food for thought and something to take away with you into the trading day and beyond. Why not think about this? Westpac has said that global macro data needs to improve to justify recent equity gains. And with two charts here, the Westpac Global Data Surprise Index is the first one, and we can see a sharp drop off in readings there, heading down to levels, well, towards levels that we hadn't seen certainly initially in December 02, and perhaps not so far away from the very low points that we saw in December 2008 in the height of the global financial crisis. And in terms of what that means for equities, well, as we can see here in this second chart with the global equity indices well, sorry, the S&P 500, I should say, plotted against the global economic surprise index in red, we can see equities have picked up, but as we've seen, the economic surprise indices keep heading down. And so, as far as Westpac's concerned, a sustained bounce in equities will require a recovery in global growth sentiment, which we're not seeing at the moment, of course. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin is a risky business. If you are uncertain about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. We'll be happy to take you through those. And do take the time, please, to read this risk warning thoroughly. Thank you for your time today.